Guys, we're going to go over 4 companies today that reported. They all beat on earnings per share. Only one missed on revenue, and yet only one is up today. Let's start with PayPal right here. They reported $7.85 billion in revenue versus $7.88 expected. So they missed on revenue there, but they reported $1.20 EPS versus $1.07. That's a big beat, and they're down 6%. Guys, I own PayPal. I like PayPal. Don't buy any company because I or somebody on the internet or even Warren Buffett owns it. What we're here to do is to teach a process. But what's most important on this company is this company is up 60% in the last year, so it's garnering more attention. This is a company that a lot of people said was left for dead, was dying. But Mo's going to go over the earnings release here pretty shortly, and we're going to go over how they're not a dying company. Mo, what is their revenue up? Even though they missed, what's it up year over year?
6%. 6%
year over year. Not huge, not great.
Yeah. Total payment volumes increased 9%.
What else you got?
Let's see. Transaction margin dollars increased 8%. GAAP operating income increased 19%.
Dead. So why is it down 6% today?
GAAP operating margin expanded 198 basis points.
Why is it down 6% right now?
I don't know.
Guys, I did a poll yesterday because later on this day, if you like this, later on the day, we're going to report on Chipotle, AMD, and Google. I did a poll yesterday on my Twitter. I said, who do you think will perform the best after they report tomorrow? 40.5% said PayPal. And it's doing quite poorly right now.
Yeah.
Quite poorly.
Based on the stock price. But everything else seems legit.
The fundamentals.
God.
Remember, we want to look at earnings releases and say, what is going on with the company here? Is this really a cause for concern?
Wow.
What's wow?
Free cash flow is up 31% year over year.
And their free cash flow is incredible. Look at their free cash flow here, Mo. Their free cash flow versus net income, $6.7 billion versus 4.4 in the last 12 months and 4.85 versus 3.6 over the last 5 years. So they have great free cash flow. It's increasing, but the stock is down 7%. If you like this company, we've done many videos on our main channel going over this company and my assessments of it and what I think of it in terms of a value play versus not being a value play. Guys, look at earnings releases and opportunity to buy companies you love at better prices if they miss. But in the short run, this shit doesn't matter. Who the hell cares if they missed by a penny or two? They missed on revenue by $30 million. On $7.85 billion, they missed on $30 million. That's not even 0.5%.
I'm freaking out.
Company number 2, Mo, your favorite shoe company in the world.
It is.
Crocs. Crocs is down 17.5%. But here's the catch. They beat on revenue, $1.06 billion versus 1.05, and they crushed on earnings per share, $3.60 per share versus $3.10. But they came out and warned about the slowing growth of Hey Dude.
Oh.
That's the reason why they're down a lot.
Oh.
What do you got overall here, Mo?
Third quarter EPS up 17%. Third quarter revenues increased 2%. Third quarter Crocs brand grows 8%. Let's see. We've sharpened our Hey Dude strategy to create higher brand relevance. Do you have Hey Dudes?
I don't, but everybody I know who has them loves them.
I don't have any.
Loves them.
Everybody wears them.
Everybody does.
Gross margin was 59.6% compared to 55.6%.
Do you know how hard it is to move up your gross margin that much? Yeah. You know how hard that is? That's incredible. That's incredible. Good for them. Here's a company. Look at this, guys. Crocs went all-time high. I think it looks at 183. Back here, it got as low as $46.08. That's a big drop very quickly. And then it rebounded. And if you happen to buy in this area right here, you're looking pretty good. But remember, guys, what matters is what are the fundamentals of the business doing? Mo, was any of the revenue, profit, or free cash flow down year over year?
Not that I saw. No.
Do you see what I mean about short-term gyrations? You should love this. You should absolutely love this. Company number 3, a very popular internet company on the internet, I should say. SoFi, they crushed on revenue, $689.4 million versus $631.5 million, reported 5 cents versus 4 cents estimate. Let's see how SoFi is doing during the day. They're down 8.6%. Now, this is a company that's been beaten up pretty heavily here. Hit a 52-week low of $6.01 here. All-time high of $28.26 back in 2021. Now, guys, this is a banking company, so you have to look at this as more of a bank. Mo, what did they report in their quarterly release?
Here's some highlights. Recorded adjusted net revenue with gross accelerating 30%, driven by 64% combined growth in financial services and tech platform segments, representing 49% of total adjusted net revenue. 35% growth in members. It's pretty good.
How much?
35% growth. Company recorded $174 million in capital light fee-based revenue, reinforcing strength of increased mix, higher return on equity revenue. Wow.
Guys, if you're in our community and you understand banking, please have a conversation about
100%.
SoFi. Because I look at SoFi, Mo, and I'm thinking to myself, like, if somebody can understand banking and really explain it well and understand what's going on with this company, this is a company that's growing like crazy. I mean, let's go look at revenue over the last few years. Look at this revenue growth. 270, 440, 565, almost $1 billion, $1.6 billion, 2.1.
Wow.
Trailing 12 months of 2.32. And they just replicate last quarter, they're going to do $2.8 billion in revenue. I mean, that's in the next 12 months.
They're like $10 and their all-time high was 28. I mean, this is definitely something you should pay attention to.
Yeah, we like looking at big falls in price where fundamentals are getting better. Now, how do you work the fundamentals of SoFi? Well, for one thing, revenue is increasing, but you got to understand more about the balance sheet, how they lend their money out, what are the margins they do that. Now, guys, fourth company, one of my favorite companies of all time. I use their product every single day. Mo, what's the company? McDonald's. Every morning I get a sausage burrito and a large Diet Coke light ice. I give them my code, my drive-through code. I get my points.
They reported points?
Yeah, absolutely. $6.87 billion in revenue versus 6.81 expected. $3.23 in profit per share versus $3.20. And I think it's the only company out of these three that's up. Oh, yep, it's up 0.8% today. Now, guys, they had the E. coli thing happen last week. Somebody died. I think they had other problems, but like 49 people got E. coli. They found it from the onions at some California. So some California farmer is going to get totally like screwed here. I don't know if he's getting screwed or not. Maybe he did something wrong. He or she did something wrong. But McDonald's is up. What are they reporting here, Mo?
Third quarter global comparable sales decreased 1.5%.
Wow, that's not good.
U.S. increased 0.3%. International operated.
Did they take me out of those numbers just to see what the sales would be if I didn't go there every single day?
Yeah, they have a asterisk here, and it says it would be up 1.3% if they included you. But you move the market too much.
They exclude me from all their numbers. Yeah. Okay.
Revenues overall, consolidated revenues increased 3%. System-wide sales were flat. It doesn't, but it's interesting because this is the only company that's positive right now.
Isn't that
interesting? Seems like the worst report I've seen. Not that it's bad, but it's the worst report I've seen.
Yeah. So this company, they pay a nice dividend here that people love, 2.18%.
They declared a 6% increase in that.
Okay. 6% increase, so it takes them to 2.3%. Price to free cash flow, 30. 5-year price to free cash flow, 35. PE is lower because they show a higher net income in the last year than profit. Same with the 5-year free cash flow, $6.8 billion versus $6.05. Really high return on invested capital, Mo. Moat status right here, 26%. Very solid. Yeah. Gross margin, 57%. Damn. Same as Crocs.
Yeah.
Now, guys, remember, this doesn't mean every time they sell a hamburger it's 57 cents. McDonald's, the company, they make their money from charging royalties to their franchisees and franchise fees and rent and all that stuff. That's why their gross margin is so high. Because look at this revenue here, $25 billion. There's a billion McDonald's in the world. There's no way they do $25 in revenue each. There's not really a billion McDonald's in the world.
That business just blows my mind.
Why?
When you're taking a road trip and you're like, oh, I want to go to McDonald's. I won't go at this exit. I'll go at the next one. I'll go at the next one. And it's at every exit. It's crazy. It really.
And they all do well.
Yeah, it's really something.
Oh, I love McDonald's. It's so good.
When you really
I get a cheeseburger. I get nuggets. Crazy. Man, I love that place. I actually like the Diet Coke at McDonald's more than the Coke Zero. I don't like the Coke Zero at McDonald's.
Really?
Yeah, so I focus on the Diet Coke. Light ice.
That.
What was that?
They appreciate that.
Guys, who knows what's going to happen when companies report? This is what we're trying to explain to you as a channel. I just came back from my old high school, and they were to talk to the kids there. And the guy who brought me in was like, hey, Paul, you look at the markets. What do you think is going to happen after the election? I just looked at him and go, I don't care. I go, it doesn't matter. He goes, really? I go, it does not matter. I go, what happened after the last election? He's like, he explained to me. I'm like, I don't know if that's what happened. How about the one before that? How about the one before that? I'm like, at the end of the day, what major thing happened after companies report, after elections, all these things? People just have short-term reactions. 41% of my people who voted in my poll thought PayPal was going to have the best move up. And so far, it's down a lot. But we'll see after hours what happens.
I'll never forget, it was the 2016 election when it was announced that Trump won. The market plummeted.
And
remember
then?
that? And then it skyrocketed.
I don't remember it plummeting, but then it skyrocketed.
It was like the pre-market was like plummet, and then it skyrocketed, and then it went to all-time highs. And then Biden got elected, and everyone's like, oh my God, the world's going to fall, and then went to all-time highs. Cool.
This stuff does not matter. We're here to teach you that when you buy a company, you're buying a piece of it. When you buy a stock, you're buying a piece of a business. And we want you to focus on the long term, the fundamentals. Let me ask you this question. 20 years from now, do you think McDonald's is going to have more revenue or less revenue than today?
More.
Okay, so if you pay a reasonable price today, I was at the high school. I said to them, guys, if I buy a piece of real estate, if I buy a stock, pay a reasonable price for it, and 20 years from now, the company makes 10 times more money, where do you think the stock price and the real estate value is going to go? And they said 10 times more. I go, that's my thesis. That's really what I care about with a company when I buy a company. When I buy a stock or buy a piece of real estate, that's what I'm focusing on. If that's the way you want to focus, by the way, I'm sure when you hear that now, you're probably like, well, that makes sense. But it's hard to do that. It's hard to buy companies and wait for these gyrations. If you bought PayPal yesterday and it's down 7% today, I don't blame you if you're a little agitated. Literally, Tim wrote me a text today and said, Paul, PayPal's down big. I go, let's go. I was excited about it. I go, this is great. Because I'm a buyer of PayPal. I want to sit there and get it at much lower prices. That's the mentality that I'm trying to teach on this channel. How you apply it to your own investment ideas, that's great. But for me, it's all about teaching the fact that you're buying a piece of a business. How you apply that is all up to you. So guys, if you like this, ask to do one favor. Subscribe to the channel. Watch our videos. We have another one coming out today around 5 o'clock or so, recapping Chipotle, AMD, and Google. So it's going to be a big week this week in earnings. Don't miss it. Thank you very much for your time.